Hello, ladies and gentlemen. A warm welcome to the program. Thank you for staying tuned into Smart 24 TV, where we drive your business. My name is Anthony, and this is Financial Markets. Of course, this is the #1 show when it comes to analysis of the financial market space in Uganda and within East Africa. We are always live every Monday, Wednesday, and Friday at 9 p.m. And we give you fresh information coming in from the different investments across the financial market spectrum, and you definitely don't have to miss out on any of the updates. Remember to follow us on social media. That is at Smart 24 TV now on X, as well as on YouTube. You can actually watch us live at Smart 24 TV live. We are always ready, and we are giving you the best when it comes to business. Now, the stock market has been under a lot of pressure recently, and there's been a lot of, that has happened, especially in the second quarter, leading to June 2024. When you look at secondary market activity and performance, the companies that really stood out included MTN, Airtel, and the like. There was a secondary offer by MTN Uganda where it took place between 27th of May and 10th of June. That was still in the second quarter. The offer was also made in accordance to Rule 15 of the Uganda Securities Exchange Rules of 2021. And it was a success. Actually, oversubscription was witnessed, which I think was the very first that we saw. And a lot more has been happening. And today we want to discuss what the trends are, where the future lies for the different markets, starting off with the stock market. And joining me on set to discuss this and more is none other than Mr. Bateme Calvin David from Crested Capital. He's the lead team of new business, and he has a lot of experience trading on the stock market as a stockbroker, but also as a financial analyst. Mr. Bateme, you're most welcome to the show.
Thank you very much, Anthony.
Should I say Happy New Year?
Maybe. It's been a year since I was here.
Yes. It's been a while.
Yes.
How have you been? How is work at Crested Capital?
A little busy, I could say. Last year was a good year. We had very many things in the market. We had an IPO concluded, and after the IPO, this year we had the secondary offer coming in from the telecom sector still. And yeah, we've been a little bit busy at work.
Yeah.
Yes.
Let's talk about your work, first of all, at Crested Capital.
Yes.
What sets you apart as a stockbroker from other stockbrokers? We know the market is not as wide. We don't have as many stockbrokers. Okay. But in the space of capital markets, what makes Crested Capital unique?
What makes us unique, first of all, I could say Crested is the only local broker. Yeah? We are a local broker in that we are a Ugandan company. Most of our colleagues.
Boo-boo.
Yes, boo-boo. Basically, boo-boo. Yes. We are an independent broker. We are Ugandan, with shareholders from all over, but we are a Ugandan company. Our brothers and sisters in the same market, you see, they have roots from Kenya, some from South Africa, but us, we are local. That's what sets us apart. And the other thing we look at is our niche is this smallholder. That's why I say that we, over the years, actually we are celebrating 20 years this year. Yeah, we are 20 years old, and that is now we are adults in the market. You know, most companies in Uganda don't survive their 10th year or even their 5th. But if we have been here for 20 years, then that is trust from the market, and we have been resilient in this space. So, what sets us apart is Crested. We have over the years built on our clientele in a way of making research, because we have research coverages on all listed entities in Uganda. That's all the 11 companies and some selected few from the region. So we cover those, and we can always do independent research for a client if you need it. We ventured into the fixed income space, and we are also helping clients invest in treasury bills and bonds. And we also do private equity. We have sourced funds for a couple of clients here and there. So basically that's what sets us apart. And also the other thing that we also the official economic subscription agents in Uganda. So you know, at Crested, since we are large on research, we don't like getting hearsay. So If you want a story on a global scale, you can read the Economist magazine, and you can get the real detail on it.
Well, and I love the fact that you keep your social media presence very strong and keep it as simple and readable as possible.
Yeah, actually, it is the age. It is the age. We are in a telecom, in a technology era, in that we have to utilize all that's available for us to communicate with the clients. In that social media, that is on X, on Facebook, on LinkedIn. We have Twitter Spaces, we have Zoom Spaces. Even if you want Teams, we are everywhere. So, because for us, we usually say that you don't want to invest in what you don't understand. Yeah. So in so doing, we always have these periodic calls about the market, about what, it's an update about what's in the market. And we are also a walk-in company. You can just walk in and consult on whatever you want to invest in before you invest in it. Actually, at one moment, our CEO told us that don't let anyone invest if they don't understand what they're doing. Because if someone invests their money in what they are not understanding, they may end up bringing out chaos at work, and because they don't understand what they're doing. Because the stock market is volatile. So if someone invests in a company and comes back when the price is 50% down, a person will be very happy.
He won't be. Yeah, I've met people, for example, who invested in some companies, and the price was over 200 shillings, and then today, by the time he came back, there was 50 shillings.
He
wanted to strangle me. Yet me, I'm not even a stockbroker. I'm just.
And it is very, as an analyst, sometimes we are caught in the crossfire, because for you the figures will be telling you otherwise that actually this company is going to perform. You are seeing light. You are seeing light ahead, but ideal on the paper, the client is seeing that I invested this much, but I'm having half of my portfolio eaten away. But in that, as I said, we always advise, because the stock market is not a one-time thing. It is not a one-off. You have to keep in the market to gain from the market. Because if you bought your stock at such a price X and it's now Y, there's always what we call averaging out. Continuously buy that stock. Because we try to tell our clients that don't buy a price. Okay, you can always invest when the price is good, yes, but don't look at the price. Look at the company. Look at the business. You're buying into the business. Is the business improving or is it declining? If the underlying company, the business is going down, then that's bad for that stock. But if the business is improving, then it means that company has a good future, so you can invest in it. Yes.
Well, amazing. And investor education is very important, like you mentioned, for people to understand a little bit more about this. And this is why we bring you here, to give us more elaborate information and get to inform the public. Now, let's look at the equity space. Equity markets have been quite volatile recently, but let's start with the highlights. MTN issued what we call a secondary offer. It's something I think we had not seen before. I don't know.
We've had women secondary offer. Yes, women.
Okay. Yes. I think this should have been the second one.
Yes.
Yeah.
So it has been like 2013, 2012. That's when we had the secondary offer.
Yeah.
Yes.
And when you look at the figures here, MTN was required to offer at least up to 20%.
Yes.
But didn't meet that at the IPO which ended 6 December 2021. The listing was also approved following MTN's written undertaking to the USE to make additional 7.03% lot available by 5th December 2024. Tell us about this, because it is something some people didn't understand. It was for a very short time, I think from 27th of May to 10th of June, very few days. And it was oversubscribed too, we are told. Tell us why this was a very significant thing to happen to the exchange.
Basically, by regulation, to list on the exchange, you are entitled to list at least 20%. Yes, we have companies that are listed 100%. Every company on the exchange actually is 100% listed, because all the shares are listed. Only that most of them, the 80% is still with the parent company. Yes, 20% is free float. It's what the general public is trading with. Yes, so MTN had to fulfill that mandate to have it fully listed by listing that much. Sorry. So with that, they listed in 2022, and they listed about 13%. So they had come back and list the remaining 7%. And it is great to the market that this offer was oversubscribed, because it shows market confidence, and also maybe particularly in the MTN stock that people are confident in the what, they are pleased with the performance, and as you can tell, the returns on the company have been improving year in year out. Of recent, they released a dividend of about 6.6 shillings per share, and I usually tell my investors and friends that of that much of about, I think about 240 billion, or of all the profit that's going to be given out, how much are you taking home? Because that's the stock market is a game of numbers. If a company is issuing so much in dividend, because most people always say 6.6 is very small, but it's just a multiplier with the number of shares you're having. So it means that the more shares you own on the market, the better for you. So if any clever investor would say that, let me have a plan on how I can accumulate my shares on the market, and it has become very easy in that on your mobile phone you can actually buy those shares just by dialing. If you go to your mobile money menu, there's Uganda Stock Exchange. You can either sell, buy, or even open an ECD. For those who don't have a trading account, you can do all that just with any phone, with a Samsung phone, an iPhone, whether it is a Katocho, you can use that and buy stocks. So it's all about inclusivity, because with financial inclusion, you want even someone who is down there in the village to be able to access. You don't need to come to Kampala to Impala House to see us. Just trade on your phone, and you have your shares in your system.
Amazing. And you know, there are people in the videos like Charles Mire who take billions of dividends. When you look at the figures, you get, and yet the dividend is just 6.6, but he's taking home 5.5 or 6 billion.
It's for those clients who take that much of a dividend, means they actually also put in a little more. Much more. If you read any company financially or annual report, you see that they usually put for you a list of the top 10 or top 20 shareholders. So if you look at how many shares they are each having, and you multiply that by now the share price, you'll identify that they've actually invested a good sum of money in the business. So for them, they looked at buying into the business, not buying a price. Yes.
Wow. And that's, I think, a very good lesson, buying into the business, knowing that I'm buying into something to be part of something.
Yes.
Not just looking at the price.
True.
I think that's a very amazing concept. Looking at still MTN's oversubscription, we had over 20,634 shareholders, investors rather, participating.
Yes.
But on top of that, we had NSSF and other local pension funds facilitating more than, of course, 2 million Ugandans in those particular saving schemes to be able to also buy.
Including me.
Okay. Are you coming in as NSSF or part of the 20,000 investors? Both. Okay, that's nice.
Yes.
Now, let's talk about these institutional investors.
Yes.
When these offers are brought up, even be it an IPO or a secondary market offer, we see so much in participation of institutional investors. But when you look at a larger scale, they seem to crowd out, in most cases, these retail investors or smaller investors.
Yes.
The people you as Crested Capital say you represent. Now, is this to the detriment of the market, or it's to the advantage of the people who are actually part of the institutions themselves? Because you're looking at, for example, Airtel IPO, over 199 billion was invested with a huge offer for the institution, NSSF. But then that offer wasn't still matching the retail investor offer, right?
Okay.
And we saw that there was very little participation of retail investors in that IPO. So is it a good thing or a bad thing for us to have the dominance of these institutional investors within the market?
It's not a bad thing. It's not a bad thing. And if you look at the way the shares are distributed, the shares are distributed on a pro rata basis. Yes? If at all you say they crowded out investors, local retail investors, but per se, you see, retail investors got the first pick. Always get the first pick for the IPOs I've been in. Yeah? The retail investors take the first pick, then the institutions come in. Because they say, of course, it's Uganda first. It's Ugandan IPO, Ugandans will take. So, the retail person is always protected. you have the first pick, then the institutions will come in and take the balance. So it's not that the retail at IPO level that the institutional investors will come and crowd out and take all the stocks. Because it's very possible that NSF can come and buy the 20%. But remember, we are looking at having the local person also have an investment in the stock market. So they'll have the first pick, then the likes of NSSF will come and also take their pick.
But also, David, when you look at the numbers, we want to increase the number of retail investors.
Yes.
And when the more these institutions keep taking up all these big shares, the more illiquid the market becomes. Because remember, I don't think NSSF often comes to your desk to trade, right? But then these retail investors who want to keep trading, they want to get some capital gains and all that, and they put to a disadvantage, because we also want a market that is liquid and a market that is going to be vibrant.
But you can't blame the institutions, because if they are there to make money and the companies are invested in and making money, then why do you want them to sell off? Why if you do trade off a stock that's giving you high returns? You've seen in the papers how much NSF has gotten from MTN, from Airtel, from Umeme, from Safaricom, and all the like. Why do you want them to trade off such as a stock? Yeah. Yet at the end of the day, the likes of Calvin, who are members of the NSF, want a better return, because ideally 10% is not good enough. We should be pitting the 1 year bill, maybe 15%. Yes, so it is a good investment for NSSF, but if the retail person should also come in on the IPO to participate, because you cannot sell what you didn't buy. Yes. You can't sell, and even I know of clients, retail investors who don't buy to sell, because they are buying into the future. They are buying into the business, but they always hold until the price is right to sell. Yes.
Let's talk about the other participants in the market.
Yes.
At the end of the second quarter, we had the 4.6% drop in market capitalization to 22.4 trillion from 23.4 trillion.
Yes.
When you look at this decline, it was mainly due to decrease in market activity or market capitalization on mainly 5 cross listings.
Yes.
That is EBL Equity, Jubilee, Kenya Airways, NMG, and KCB.
Yes.
Let's talk about these cross listings. What are they doing on the exchange? I don't know if I'm getting it wrong, but the only thing I see on these cross listings is price movements. But I have hardly seen a trade in the last 2 years. I think I only saw Centum, which sold 100 shares in August 2022.
Yes.
But there hasn't been any activity on these cross listings. Yet they affect the numbers.
Yeah, as I said earlier, you cannot trade what you didn't buy. Yes. So, and most, those cross listings have not happened in a while. The cross listings happened in the early 2010s. Yes. So the people then who bought those shares are holding on to those stocks, because if you look at all the companies you've broken down, are not performing badly. And if you look at the exchange rate, Uganda at Kenya, if I'm getting such a dividend with such a multiplier, why would I sell that stock? So we are not seeing activity on the cross-listed companies simply because we don't have the stocks in Uganda here. Most people who are trading those stocks are trading them across the bars on the NSE. Yeah, they're going directly to the Kenyan bars and buying the stocks that side. They're not here, because the people who have them in the Ugandan space are not trading them because they are getting good returns on them. Yes.
So to get the picture, most people buy these stocks to hold, and then when they want to trade, they buy on NSE because that's where the activity is.
Yeah, because no one is supplying on our side. So if you want supply, you'll get it on across the board where the majority is listed. Yes.
Does it bother you that NSE, which is the oldest exchange in East Africa, still hasn't had any IPO in the past maybe 5 years? I think the last one they had was the Real Investment Income Trust.
Yes,
and then
they've had a couple. They had the cross listing of Bank of Kigali. They've had a lot of this year. Actually, they've had a lot of activity in the cement industry. We've seen. I think there's a listing going to happen of Bamburi Cement. So there's a lot of activity on the NSE, and you see what is happening in the economy of Kenya. There's a lot of activity. on their side. Even if you look at the volumes traded, the foreign investors coming in and out, so there's a lot of activity on the NSE. And as Uganda, we should look at what is being done there and see whether we can mirror it here, attracting the foreign investors to come in our space and all that. And you see, they don't have 11 listed companies. They have about, I think, over 60 companies listed on the NSE. So for you to have turnover, you must have also companies that are trading that turnover. And if ideally, if we see all the big banks here coming in to invest, all the big manufacturers investing here, we shall have activity, because ideally these are very highly profitable companies. And if you look at the USE, the majorly women as of yesterday, women has traded about 63% of the market, simply because of the concession coming in. MTN has traded about 16%. So you see, activity is where there's a profitability in the company. So companies that don't trade are companies that are not making money for people. Yes, people will be attracted in trading what's making money, ideally.
That's right.
Yes.
And I can't agree with you more. However, Nairobi is a model, I think, for us to follow. And recently also, they've had their issues with the depreciation of the Kenyan shillings. They have had issues of the weakening, of course, of the Kenyan shillings and inflation.
Yes.
And also these recent riots that actually happened. Do you think that also, had a ripple effect on our market slightly? Because I'm also looking at, by the end of the review period, I'm looking at the second quarter, the value of locally listed stocks or domestic market capitalization dropped as well by 3.1%. That is to 10.7 trillion from 11 trillion. Do you think there was a ripple effect of what happened in Kenya, here in Uganda, or there was nothing at all?
I usually tell my colleagues at work that the US is a special boss. It's rarely affected by even the pandemic. COVID didn't hit it much in price, or because the participation locally is not that big. If we don't have local participation, if we don't have trades happening often, then you will not have a ripple effect happening, because no one will react to any news. Because sometimes you see that there's a release of maybe financials and there is no trade on the counter. So simply because people are not actually trading. Yes, and simply because maybe not very many people have the knowledge about the market. So with the continuous sensitization through the CMA and USE, we shall see that more and more people come and understand the market, and maybe such things will come and maybe affect us in a good way or bad way, because if such things happen, they will affect productivity of the companies, and maybe financials will be bad. Because if you look at the scenario happening now in Kenya, whereby Safaricom is having a fight with Starlink because they're providing internet. Yes. So if Starlink, if I remember well, it is giving out speeds of about 200 Mbps, yet Safaricom could be giving about 30 Mbps. That is a way big gap between the two, and you see that there will be a shift in clientele from Safaricom to Starlink. But if that happens here in Uganda, then we don't know what will happen to the two telecoms that are giving the two services, and what will happen to their revenues. So with the more market sensitization, we shall see more activity on the bourse, and maybe such ripple effect shall be happening. Because I remember a client called me and told me, now that we are going into the first season, do you expect prices to move and what? Yeah, they can move, because if people are coming into the market to trade off their stocks, they could be maybe for the festive seasons. If the December effect comes in January, whereby people are now looking for money and they're selling off their stocks, maybe the prices could go down because there's a lot of supply and the like. We've seen those happen in other bigger markets than ours. But ours, people who have stocks, just hold their stocks and they sell whenever they deem it fit. They are not influenced by, most times, market information and the like. Although recently we've seen on some stocks, on some counters like DFC, where actual information moved the price. Even on the Umeme stock, we saw it running from about 165 to currently about 435, just because of information about the concession and the buyout prices. We have seen Stanbic also move from about 22 to now 39.40, the region of that, because the counter started distributing half-year dividends. Remember, even this year they've given out about 2.6 in dividends. So that is driving price upwards. Yeah. So actually, our market also are starting to absorb information and reacting to that particular information.
Amazing. And I think we need to take a break right now. But when we return, you just pointed out some of the things I want us to actually discuss. Number one is the BFCU, then Stanbic Bank and Umeme.
Yes.
I think those counters have been some of the highlights here on the market performance. But also we want to look at the bond market. If there is something new, I always get your emails of the bond auctions and so on. We want to know what's happening in the bond market, the yields and so on, for investors who are interested in the long-term financing as well, or in the fixed income. Ladies and gentlemen, this is Financial Markets. I'm with Mr. David Calvin Bateme, who is team lead new businesses at the Crested Capital Stock Brokerage Firm. We're going to take a quick break. Please don't touch your dial. Stay with us.